On the surface, I think everyone says, yeah, it sounds like a great deal. I don't want to pay 20, 25, even 29% on credit cards, but it really isn't that simple, is it?
It really isn't, Sean, because as you said, America revolves and focuses on a lot of debt that we have. If you look at total debt out there, it's about $18.6 trillion. And of course, credit card balances of that is a significant amount, 1.2 trillion. And our nominal GDP is about 31 trillion. So we operate on debt. But when you take a simple product like a credit card, you have delinquency rates, the 90-day delinquency rates that are very, very high. They're over 12%. So if you have a product that has a 12% 90-day delinquency rate, it's going to be challenging to go ahead and charge an interest rate that is 10%, because that means that these companies will end up losing money. Now, one thing to keep in mind, Sean, and that is that some of these financial institutions that offer mostly credit cards, and here, of course, I'm talking about Discover and Amex and Capital One, they're going to be hurt a lot more because their credit cards portfolio as a percentage of their business is more than 50%, in some cases 70% plus. You take big banks like Bank of America or JPMorgan, their share of credit card business as a percentage of everything they do is below 15%. Still a significant amount because when you take it as a percentage of everything you do, it's a big number. But again, not all players will be hurt equally, but at the same time, consumers will be hurt because if you're going to have to offer a product that loses money, you
Right.
just simply don't offer it.
So if the White House goes ahead with this push of 10%, as we know it, and you just detailed, millions of Americans have significant credit card debt. With affordability on the minds of many, how meaningful would this relief be if it happened? And secondly, you talked about these companies that basically just do credit cards. A lot of times, if you get in over your head, they kind of work with you. They'll drop the rate until you can make things manageable. Do you think that this could spur more interest in that?
Well, of course, I wrote a recent article on Substack under the People's Economist talking about this because this is about $100 billion worth of monies that consumers pay banks. So consumers would, in fact, benefit if you all of a sudden cap the rate at 10%. So that I think is very, very important for banks to understand. But at the same time, as I said, if they do that, then they would lose the money from these products, and these products would become unprofitable and simply would be curtailed significantly.
So what about families who may say, look, if it does get capped down to 10%, any concern that these people would say, you know, heck, 10% is a lot better than 25 or 29%. I'm going to go back in and charge again. Could they get even higher in debt?
Well, I think what's really going to happen if you move in that direction is that yes, consumers may borrow a little bit more, but guess what? Already, you wouldn't have a 12.4% delinquency rate unless consumers were already borrowing too much. So if they start borrowing more, that gives you a perverse outcome, and that is you're going to see delinquency rates go even higher. So I certainly would not want to see that. By the way, there's another thing that could happen, and that is that all of a sudden credit cards would start charging more. All those
Mm.
rewards that you get, those things would start to go away. They'll find creative ways to get that money back in order to keep the product profitable. But the thing that worries me the most, Sean, is that if banks or financial institutions restrict these products from high risk consumers, then what's to prevent these consumers from going to other higher risk
Right.
type of loans, like payday loans and things like that, which may end up charging even more? And keep in mind that even though this proposal seems aggressive, it's only for 12
Right,
months.
right, right.
I'm sure that it has no relationship with the fact that midterm elections are in the next year. But if they were, it seems like a coincidence, doesn't it?
Perish the thought, my friend, perish the thought. Okay, let's talk about the fact that lawmakers have discussed caps like this before, and you brought it up. This could play into midterm elections. No, the GOP clearly needs some kind of boost at this point.
Yes, and affordability is an issue. And by the way, I commend the administration for trying to work on affordability. They're doing it on many fronts, like even on housing. They're looking for ways to make houses a little bit more affordable by pushing for lower mortgage rates. All those things will help. If you have the government-sponsored agencies buying more mortgages, you'll lower them. But at the same time, you got to also be careful there because if you allow these prospective homeowners greater flexibility in being able to buy these houses, and you raise the demand for houses without increasing the supply, it ends up boosting up the price of houses.
Right.
And that means affordability is a problem there. So there's a lot of things they're doing on affordability, but you have to take a sort of a balanced approach to really
Yeah.
gain traction on those proposals.